Welcome back. You're watching Market Fatafat on ET now. Actually, let's bring on board the management of Godrej Consumers. We do have Mr. Sudhir Sitapati, the CEO at the company, joining in with us. Why? Because there's been an exciting launch that's happened today in the HI segment for the company. But what is the outlook of the company going forward? What does this launch mean? To talk all about that, we have Mr. Sitapati joining in with us. Very good afternoon, sir, and thank you so much for joining in with us on ET now. I want to start by obviously in terms of this new launch that's come in for the company in the HI segment. Where do you see this taking the HI segment going forward in the next couple of years? And how do you see this contribution improving or going forward? What is the contribution one could expect from HI segment?
Last time there was a new molecule in this category, we saw explosive growth in the category. So I do hope that with a new molecule coming in, being a lot more effective than the existing molecules in the market, we will see great performance for the business as well.
Hi, good afternoon, Sudhir. This is Shrishti also joining in. Just want to understand that what is the company's strategy for this particular segment and any additional investment that the company is looking to make for this particular segment in the times ahead?
The Godrej strategy for the household insecticide segment is to get consumers to use electrics and aerosols, more premium formats, better formats, rather than using burning formats, and to premiumize the market. We want to do that by giving better, more efficacious and safer products. In this category, you have to be efficacious and safe. So we are hoping to do both.
Right, and just in terms of overall the HI segment outlook, specifically for FY25, where are you seeing it headed? A double-digit growth on the charts?
I mean, it's hard to give an outlook within a year, but the HI segment or branded players should grow at double digits over, maybe not in the first few months, but soon after this launch takes off. We anticipate that this category has the ability to grow double digits.
But Sudhir, everyone that is into the consumption space is also talking about the rural recovery. Give us a sense that how are you seeing the rural recovery happening and what is your outlook on the same?
I mean, the rural markets have been relatively soft after COVID, and they broadly continue to remain a bit soft. We do see some green shoots, and I personally hope that by October, with a good monsoon, I hope some good stimulus in the budget, rural markets recover. This product has high potential in rural markets as well. Rural electrification has happened at a very fast pace over the last few years, and electrics are the best solutions for fighting dengue and malaria. So we hope it does well.
Okay, and lastly, just budget is around the corner. So what is the wish list, that you are understanding is coming from the consumption sector? Anything that we should be watching out for specifically?
I think my wish list for the budget would be a stimulus of direct money in the hands of rural consumers for a period of time, so that we can kickstart the virtuous cycle of rural growth.
All right, and also Sudhir, the overall growth for the segment that the Godrej Consumer is in and the target for the next 2 years, what could that be? If you can share us your expectations there.
I mean, our publicly stated number is to be at high single-digit volume growths. We'd be quite happy if we were in that vicinity over the next few years.
Okay. Thank you so much, Mr. Sitapati, for joining in with us this afternoon on ET Now. Obviously, a new launch that's come in for them in the HI segment, which is been there with the company for years, and this is a specific launch that has come around. When you look at it, they have tied up and partnered with Shogun in India for this molecule-based product that they'll be making and developing with GCPL with the company together for the HI segment. So yes, expecting a double-digit growth, maybe something that we could watch out for from the industry specifically in this segment, is the word coming in from the management of GCP, a new launch in their segment. But let's move on and also bring on board Aditya Arora joining in with us this afternoon. Aditya, very good afternoon. Thank you so much for patiently waiting by. But the first stock that you picked out for us is Coforge. Obviously, the IT pack today is buzzing in trade. TCS, a decent number that's come in. What's the word that you have for Coforge now?
Very good afternoon to you and to everyone in our panel and viewers. Look, IT space is buzzing today, and Coforge is the best performing stock today and one of the top gainers. And in fact, Coforge was the one which started the rally. And I think there's more steam left. If we look at the current chart structure, I think there's more steam left, and this looks really good at current market price of 5980. Stop loss should be 5680, and target should be 6200 to 6400.
All right, that's about Coforge, how the technical setup is looking like. But sticking with the ITs, let's touch upon HCL Tech as well, as the numbers are due today, and what the street is penciling in that this time there could be a constant currency decline of 2% that we can expect. The dollar value could also come down by 2%. Other than that, if we talk about the EBIT margins, that could also shrink 70 basis point on a sequential basis, while the profit could see a decline of 4.5% at 3,820 crores is what we are expecting at ET now. Now, what could actually impact the numbers is the pass back of the annual productivity gains, and the offshoring of the large deal could actually impact the revenue growth of the company. There could be an impact of the HCL Tech's divesting 49% stake in their JV with the State Street to Way, and 2 to 3% of a quarter-on-quarter dip in their PNP sales given the seasonal softness. These are the factors that could play in for HCL Tech, but indeed with the street really rejoicing or enjoying TCS earnings, HCL Tech is also up around 3%, just ahead of its earnings.
Surely keeping an eye out on that IT company as well. Let's move on, talk about Zomato, and why is that in focus? We have a brokerage note that's coming from UBS. They're maintaining a buy high, their target price by 10 rupees. So 260 rupees is the new target price versus 250 rupees, which was the previous target price. They believe that the industry volumes currently are at 1% growth on a month-on-month basis in the month of June. And this is adjusted for the number of days also. So yes, volumes surely seeing a slight bit of a growth. They believe Zomato versus Swiggy, there is a push and pull that one may see in Q1 FY25, but estimate that Zomato's gross merchandise value quarter-on-quarter growth would likely be at somewhere around 9%. So they continue to stay positive in Zomato, and a target price of 260 rupees is what they are highlighting for the company and the stock right now, and it's holding on to gains of almost 1% in trade.
All right, that's about Zomato, but let's talk about MMTC and Aditya. That's the stock that you have picked up. Stock is already up around 6%. But how do you see that stock on the technical front, and what are the targets?
Right, so MMTC looks really interesting because the metal pack is doing really well. Not in India, but internationally, metals are doing pretty well. We saw precious metal rising yesterday, and I think there's more steam left over here because dollar index is correcting now, and that has negative correlation with metals. So I think once this rally in metals starts, MMTC could be one of the beneficiary. So this looks good at current market price of 91.27, and stop loss is 85 and target is 96 to 100. So this looks good on the charts.
Okay, looks interesting and good on the charts. That's the word coming in for MMTC from Aditya. Let's move on and talk about Sign then, Gaurav, and why we picked out this one for us today.
Well, Cyient is in focus because the company has announced its strategic expansion, and what company is going to do now is that they are going to set up a subsidiary for semiconductor business. What, as per management, if you look at the commentary, they believe that this decision actually marks a significant leap forward for the company's commitments towards innovation and excellence within India's growing semiconductor landscape. What this will do is that now this will enhance the capabilities in the application-specific integrated circuit turnkey design and manufacturing for the company. When we look at some of the opportunities, now the global semiconductor market is expected to hit $1 trillion by 2030, and when we talk about Indian market specifically, we may see this market growing to around $100 billion by the same year. And now with this semiconductor business, the company is well positioned to capitalize on the opportunity that we have in the semiconductor space. If we look at the stock performance also, we are seeing this, the investors have taken this news in a positive way. The stock is up almost 3.5%. So it looks like a very good news coming up in Cyient when we talk about semiconductor business.
All right, that's about Cyient. But Janet, take us through the earnings and the highlights of Anand Rathi Wealth.
Well, yes, so company reported a good set of numbers. The revenue saw an uptick of about 36% year-on-year basis, coming in at 238 crores this quarter versus 175 crores previous quarter during the same time. Also, the net profit saw a significant jump of about 40% year-on-year basis, reported at 73.4 crores versus 53.23 crores. If we talk about operating performance, then EBITDA saw a jump of over 34%, coming in at 98 crores, and EBITDA margins slightly declined by about 57 basis points. Also commenting on the performance, Mr. Rakesh Bawal, who is the CEO of the company, commented that they are confident on company to grow at a pace of about 20 to 25% in long-term basis.
All right then, that's about this particular counter, but let's have a look at the aviation space because the aviation space, especially Indigo is in focus because as we know that there has been a key announcement made by the Boeing where they have actually gone ahead and said that Boeing company has notified some 737 MAX customers in the recent week that their aircraft due to the delivery in 2025 and 2026 face additional delays. Now UBS has come out with a note highlighting that what could be the likely impact on some of the aviation players, and UBS does say that Indigo has zero exposure to the Boeing while competition has significant exposure. They continue maintaining their buy rating with a target price of 5,400 rupees, and they do say that the lower supply from the competition could push up the fares, and that's why this stock is also in focus. On the back of this news flow, this counter is in focus and holding on in the greens right now.
Absolutely trading and flying away in the green right now. But on that note, we're going to slip into a very short break. Don't go anywhere. More updates and more stocks after the break.
Welcome back to Market Fatafat, and Aditya coming to you for the next counter, and there's been no stopping for Manappuram Finance, and especially after that we have seen that stock crossing decisively above that 203, 205 odd mark. But after 5% of gains today, do you believe that it still holds well for a fresh buy at this point?
Absolutely, as you rightly pointed out, stock saw stellar move today. Although I think stock has run quite a bit, but if we take a positional view, I think there's still more steam left in this counter. As the relative strength is pretty impressive, whereas other finance counters are not doing much and not even breaking 52-week highs. This stock is just flying away. So I think there's more, steam left, and the kind of volumes which we are seeing are suggesting that institutions are pretty much interested in this counter. So not taking a 1 to 2 day view, but if we take a view of let's say 2 to 4 weeks, then I think this stock still looks good.
Okay, that's the word coming in on Manappuram Finance. But Gaurav, the next stock that you picked out for us today is Aditya Birla Fashions. What's the reason for picking this one up?
Well, yes, Aditya Birla Fashion is in focus because company has now raised its shareholding in one of the companies, which is Goodview Fashion, from the existing shareholders, and this is going to be the deal worth 127 crore rupees. The entity actually, which is the Goodview Fashion, actually sells the ethnic fashion clothes under the brand Tarun Tahilani, and Aditya Birla already had 33.5% stake. Now that they have acquired almost 17.5% of the additional stake in the company, the total stake in this company for Aditya Birla has now gone to 51% through a secondary acquisition. But when we talk about the share price, we saw this share saw a little bit of dip in the morning. Now the stock has actually recovered, but still watching out on how it looks for Aditya Birla Fashion now that they have acquired a new brand called Tarun Tahilani.
Alright then, that's about Aditya Birla Fashion, but let's move on and Aditya, take us through what's happening with Triveni Engineering.
Sure. So in Triveni Engineering, we are seeing a consolidation and a breakout, and this whole pattern is backed by very good volumes on 19th of June. So I think it feels as if institutions are very aggressive in this counter, and when mid caps and small caps are down today, this stock is breaking out. So that could be an early sign of a rally which could come next. So this looks positive on the chart, and one must maintain bullish view on this counter.
let's move on to the next stock that we're going to be focusing on. When we have ITI that's in focus today, the news flow just came in a short while ago. Now, what we understand that ITI will transfer its land and building situated in the electronic city Bangalore to C. through the sales deed, and this obviously details of the deed is what they're keeping an eye out on. Now, obviously, the building will be for around 200 crores is a sum of money that it is for, and that has been arrived on the basis of an amicable discussion that was held between the members, so both the parties, that's ITI as well as C. So on the back of this, today we're keeping an eye out on ITI. It's holding on to gains, actually jumped up and perked up in trade. 7.4% uptick as of now is what it's managing to hold on to.
All right, that's about ITI. But Aditya, take us through how you're looking at the charts of Fortis and why have you picked this counter?
So Shrishti, Fortis really stands out today because after a long time this counter is attempting for a breakout. Although this hasn't done much in last many days, continuous underperformance, but now it's breaking the downward trend line, so suggesting that the downtrend is ending over here and an uptrend could start from here. So that's the technical reason which could trigger a rally over here. So this looks good at 478.50. One must maintain stop loss at 463 and target should be 495 to 500.
Okay, keeping an eye out on those levels over there for Fortis Health. But let's move on to the next one. And Gaurav, you've picked out all cargo terminals for us. Why is this in focus?
Well, all cargo terminals is in focus because the company has now come up with their monthly update for the month of June. If you look at CFS volumes for the company, that has reached almost 55.9 thousand TEUs, which shows an increase of almost 20% on a YY basis. And even if we compare it on a month-on-month basis, this shows an healthy uptick of around 6%. The company has said that this increase in volume can be attributed to the increase in port volumes, and at the same time, all cargo's strong presence and client relationship is also helping company to gain the volumes. In fact, when we look at some of the past data, this has been one of the strongest growth when we talk about month-on-month growth in this year itself. And if you look at the YY growth, this has been a strong growth. But despite the strong growth that is reported by the company, if you look at the stock performance, that is up almost 3%, it seems that the growth numbers have been taken in a positive way. So definitely watching out on how the results will come for all cargo. But at least for now, it seems that a strong performance update coming up from all cargo for the month of June.
Okay, surely keeping an eye out on all cargo. Let's move on and talk about AU Small Finance Bank. And Aditya, when you look at it, this one has not performed much, right? YTD basis, when you're looking at it, actually we're seeing a correction coming out, or even on the last 1 year when you're looking at it. So what's the word for AU Small, and do you expect a uptick now coming in?
Yeah, I expect uptick over here because this has become range bound, as you said. On the upper hand side, you can see range of 700, and on downside, you can see range of almost 620. So after touching the lower band of the range, this stock is rebounding strongly. So I think now it can again inch up towards the upper range, that is 700. So one can maintain bullish bias in this counter at current market price of 644.50 and maintain stop loss at 633 and target should be 670 to 700.
670 to 700 is the target that we're keeping an eye out on. But let's move on to the next stock, our retailer again that you've picked out, Janay, and Vedant Fashion. What is the word for Vedant Fashion? Why is this in focus?
Well, yeah, so Axis Capital has actually come up with a note. They have downgraded the company from their earlier buy rating to add rating, and they have also cut the target price to rupees 1,150 from the earlier target price of rupees 1,200. Now, what they believe is that fewer weddings dates in Q1 will be adversely affecting the company's performance, and Q1 of FY 2025 will remain subdued for this quarter. Also, they're expecting this demand again to revive in second half of FY 2025 onwards with the more wedding dates coming in. So that is why on the back of this, they are cutting the EPS growth for weaker expected Q1.
Okay, that was stock number 30 for today and the last stock. But thank you so much, Jinay, Gaurav, Aditya, for joining in with us on the show. And thank you so much, viewers, for tuning in to Market Fatafat. But as we bid you all goodbye in the latest episode of Masterclass with Utpal Sheth, explains why and what you buy is surely important, but what price you buy it at is very important and much more important than that. He also says that there are several types of value creation ways underway in the market currently. So listen in, and thank you so much for tuning in.
We've all seen that investors would like to buy, let's say, great businesses, good managements at reasonable value. But what is the priority out of these three variables? Right? For some people, the valuation is the priority. For some people, the business quality is the priority. For some people, the management quality is the priority. I think in a fast changing world like we are in, and where value shifts and value migration is happening in larger and larger quantum and at a faster and faster pace, one has to be with adaptable and agile management teams. This new age companies that we are talking about have a win the world mindset, okay, where scaling does not have conventional constraints. Most companies think of growth in a very finite way, but in new age business models, maybe networks and platforms, the marginal costs are constantly dropping or are very, very low, and therefore the returns to scale are phenomenal. The marginal value creation of adding one customer is so massive in the context of the cost of acquiring that customer, right. So, we know that a lot of venture capital funds use LTV to CAC as a framework of looking at companies, but here we have the opportunities of using LTV to CAC in the context of really mature scaled businesses who have already established either leadership or dominance. So, I feel that value creation in this day and age is very different and is much less constrained as compared to the past.